Peace, peace. Greetings to everybody. Just wanted to give a little insight into what we do with this trading. As you know, if you've been my Facebook friend for quite some time, you know I've been a trader for a while, and it's something that you never put down, especially when you become profitable in doing it. It's an amazing opportunity, and I think everybody should and could trade. It's just about putting in the right work, right? There's a lot of information to it, right? But once you get the understanding, it all makes sense. And from there, it's just a matter of doing the right work. It doesn't have to be a ton of work or hard work. It's just about the right work, right? So anyway, without giving away anything that the members have paid for and the students have paid for in the mentorship, but also still providing some value, I just want to share how simple it can be. So I'm going to show you all a stripped down version of one of the strategies that's used, and these concepts are freely available on YouTube if you want to follow up with them. Okay. So basically, we use a methodology that I call dealer flow, and it's designed to identify and mimic the behavior of what is commonly known as the market makers. The market makers are players in any market that have the ability to influence price significantly. And there are many types of market makers. All right, there are different categories of market makers, so to speak, because remember, we're talking about the behavior, okay, not necessarily exactly what they are and who they are, but the behavior that they use to influence the market. Most markets are manipulated to some degree. All right, so you need to understand that. And you need to understand that manipulation so that you can profit from it. You want to move with the big fish. So, uh, yeah. Anyway, I like to have my days identified. It's just a visual tool. But as you can see, that's pretty much all I have on the charts. So these gray boxes represent one of the three sessions of the Forex market. There's the Asia markets, the European markets, and the US markets, right? Commonly known as Asia, London, and New York. The gray box represents the Asian range or a portion of the Asian range, the Asian session. All right, we call it the Asian range because that's the behavior that takes place during the Asia sessions in most cases. Okay. August is an exception to the rule. In August, most of the European participants in these markets, in the corporate world and in other sectors in Europe, most of them go on holiday. They go on vacation for the month of August. So you see a dramatic dip in volume in the Forex market because a lot of liquidity leaves the market without all these participants. Um, Europe is actually one of the largest players and influencers of the U.S. dollar because so much of the activity and trading that takes place in dollars in Europe. Okay, so when they go on vacation or when something is going on in Europe, it can greatly impact the markets globally, especially those related to the U.S. dollar. Okay, this includes equities, commodities, futures, and other things. Okay. But anyway, so we're dealing with that coming out of August, which is a taper down amount of liquidity in the market. So any type of volatile move would be very, very pronounced during that time frame because there's less liquidity to absorb the volatility. Okay, so when things like Friday's Fed chair speech from Jerome Powell happen, even with mixed signals, you get these volatile moves that you see right here. Okay, excuse me. So all that being what it is, this was the move on Friday. And when you see moves like this, I like to give the market a little room to breathe and see how the market is going to react to it. Okay. Now, in the Forex market, or in most markets, they are in theory supposed to be designed to seek balance, to seek equilibrium. Okay. So that means in trading, you want to see a relative equal amount of buying and selling. Okay. So what we call ranging, okay, would represent that. in terms of the candlesticks or the price action on the chart, right? So you would have buy, sell, buy, sell, buy, sell, buy, sell. All right, so that represents balance or equilibrium. That's the theory that they put out there, that the markets are designed to be efficient markets. That's what that means. So when you see moves like this, that creates an inefficiency or imbalance in the market. All buying, no selling. All selling, no buying. Okay. So there are different methodologies that teach you how to take advantage of that equilibrium or imbalance, because it creates gaps in the price efficiency, the price equilibrium. So there are some people out there who use systems solely based on trading gaps and stuff like that. All right. So there are multiple ways to approach that, but a very simple way to approach this is when you get these extended moves, you want to let them play out, all right, and show you signs of the order flow reversing. So we got all of this selling right here to deal with this imbalance over here to the left, okay? And in that process, once this rebalance takes place, it's also creating further imbalances on the other side, okay? And what you're going to look for is you're going to look for structure changes that pull back into or retrace into the imbalances. Okay. Now, the 1 hour time frame is what we're looking at. So each one of these candlesticks represents 1 hour of price movement. The blue ones are bullish or upward price movement. The red ones are bearish or downward price movement. Okay. Here's price over here, this black rectangle, 1.16281. That's the current price. Okay. Today is Wednesday. All right. The Fed shared news or meeting happened on Friday. You saw the market's reaction to it. Then you saw an immediate rebalance on Monday because the signals or the language from Powell and a couple other Fed heads of the Feds around the country were conflicting. So you see price immediately rebalance this priced in volatility. So people were expecting Powell to say what he said. And I could talk about the macroeconomics and fundamentals about what led up to this and all this other stuff, but that's for members of the mentorship. So anyway, on a 1 hour time frame, which is our base of operations, I'm looking for the full leg extension. And what I'm going to do is I'm going to try to identify the gaps in this extension that was created from this imbalance and look for an opportunity on the pullback, the retracement, to get in and continue the overall direction that took place. Okay. So had this balance not been so pronounced and full to basically retrace this entire news move, I would have been looking for price to continue to the long side. All right. So for example, as you can see, price came all the way back into this origin over here. All right, where this news move originated from. Now, had price not come back so down into this inefficiency that was created, right? This imbalance that was created, I would have been looking for price to reverse and go back long, right? After this up move, I would have been looking for price to come down somewhere into this imbalance and continue to the upside, but it didn't do that. Instead, it retraced and balanced out this inefficiency, this imbalance in the market, all right, and started to give me structural changes that let me know that a retracement or pullback was likely to take place. On top of that, there was a overall volume imbalance created by both these extended moves. Extended moves like this typically signal that such an imbalance has been created that price will pull back and continue in the direction of the move. So they created one here, but it was nullified with this retracement, this full retracement. But in the process of this full retracement, invalidating this previous volume imbalance, it created a new volume imbalance. And it created gaps in price, market inefficiencies, imbalances in price. So this overall volume imbalance now signals to me that I'm looking for price to continue short. Okay. And so I would be looking to identify a retracement zone in this leg extension that would give me signals that it would go short. Okay. So in the Forex market, there is money or liquidity or volume or orders sitting at all these different price levels. Different price levels have different depths or amounts of money, liquidity, volume sitting at those levels. Okay. The price action shows you that, and other tools can also show you that, okay, without actually seeing the orders on the chart. Okay. Now, that being what it is, time also plays a huge factor in the Forex market. Like I said, Asian session, London session, New York session. There are specific things that happen at specific price points. Then there are specific things that happen at specific times a day. If you guys remember, before I took my social media break, I used to tell you all between 2 to 4 a.m. New York time, you can expect an opportunity to take place. Now, in the month of August, that's a little bit different due to the low volume in the market. But pretty much most of the year, that's what you're looking for. And you can even see it on these charts during August. Okay. So, all in all, remember this information is free on YouTube. You can find it. I would have been looking for a retracement, and there's a tool called the Fibonacci retracement tool. Okay. Now, you can use this tool in so many different ways. The way I use it is there are key levels in the Fibonacci retracement analysis using this tool that you expect price to interact with. And when it gets to those levels, you want to start looking for dealer manipulation. You want to look for the dealer flow or the market maker manipulation to start taking place. And I'm already in the mind that I'm looking to take short trades, sell trades to the downside. So I'm looking for manipulation of high and signals that price will continue to drop. All right, so I've got my retracement on the 1 hour time frame. Now I'm waiting for certain times of day to look for these opportunities. 15-minute. Okay. Now, first, what I want to do, sorry, let me go back. On the 1 hour time frame, I want to identify the gaps in the extension first, the imbalances. They're known as fair value gaps. You can YouTube this, okay? So there's multiple fair value gaps that I can identify. All right. There are multiple here. All right, but I want the one that's going to interact with my Fibonacci retracement levels, 38.2, 50, and 61.8, okay? You can see the imbalances or the fair value gaps, right? You can see that they overlap with these numbers. So price is free to retrace all the way back into these numbers, all right? There's certain key structures where you, in a perfect scenario, want to see price pull back too, but I have two A+ opportunities to take a trade according to this logic, according to this analysis approach. I'm looking for something off the 38.2 or something off the 61.8 because of the structure of this thing right here, okay? So I'm going to drop down to the 15 minutes, see if I can refine any more gaps in the market, okay? And I can, because here's one right here that overlaps with this entire blue box. So this is another fair value gap on the lower time frame, the 15-minute time frame. So that adds more strength to this zone, okay? And then when you couple that with seeing dealer manipulation at this zone, it's a high probability setup that you will have an opportunity to potentially trade, okay? Now I'm gonna drop down to the 5-minute for a little more refinement and show you where I entered the position, okay? So this box down here, we're gonna get rid of these. I'm gonna leave this one up here because that's a significant area that I would have loved to see price come back to, but it didn't. All right, but this particular overlap of inefficiencies on the different time frames, the 1 hour, the 15-minute, are an excellent area. And when you see how price interacted historically with this this double imbalance right here, that's a good signal, okay? So end of Asia going into London, all right, and we had opportunity to trade long right here, okay? This would have been a sweet opportunity. This is actually one of the setups that we also use, one of the strategies that we trade inside the methodology, all right, inside the mentorship. This is a perfect opportunity to make money, as you can see. Beautiful opportunity. But because my bias was to the downside, I chose not to take that setup. My higher probability was to continue with my overall downward bias that I'm anticipating. So I'm looking for price to pull up here, the dealer to manipulate, and then drop, right? So that's what I did. I waited, all right? And there are some other cues that can be identified in this process, okay? Certain price points. One thing I want to touch on is that about the price points and how there's money, orders, liquidity, and stuff like that, or buying and selling taking place at certain key price points. This Asia range, this gray box, okay, represents 3 key price points every single day. All right, you can study this for free on the internet. You have the high of Asia, the low of the Asia range, and the middle point of the Asia range. Those are high volume areas where there's a lot of liquidity, a lot of order flow, right? A lot of money sitting at those areas and transacted at those areas, okay? That sets the range for the rest of the day. So the Asia range, high, low, and midpoint set high probability areas for the rest of the day, okay? Now, so this is Tuesday and this is Wednesday, okay? Now, as far as entry opportunities to enter the market, we do have rule sets in place that allow us to mechanically look at 6 or 7 rules and say, here's my entry right here, once I see all those rules checked off, okay? So this was the structure that we were looking for, all right, at the Asia high to take place. And as you can see, it looks like this. All right, this is price action trading combined with market maker manipulation theory, okay? I call it dealer flow. So as you can see, I entered the position here where this arrow is. I set my protective stop loss to protect my account right here. And price never came back to it to tap me out. We did get a retracement, but price overall continued to the downside, and I was able to close out right here, which was 5 a.m. my time. It's 6:51 a.m. my time. So about 2 hours ago, I closed out this position for a gain of 250% on my position. Okay, so what does that mean? It means that for every unit I risk, so let's say my stop loss was 10 pips, which it was, all right? So 10 pips represents 1 unit, but I gained 25 pips, all right? So that means that I gained 2.5 times my investment, all right? So that's 250% gain, all right, from New York yesterday into right now. So 6 p.m. my time was about 11 a.m. New York time until about 5 a.m. my time. So we're talking about roughly a six-ish hour trade position. I was able to make 250%. Okay. If you risked 1% of your account, you picked up 2.5% of your account. If you risked, 5% of your account, you picked up 10.25% on your account. You understand what I'm saying? So 250% gain on my risk, and all done while I was busy with the family and sleep until I woke up. And when I woke up, I saw the position, close it out. So anyway, this video was a little longer than I wanted it to be, but it's 20 minutes of good game. It's 20 minutes of profitable knowledge. You'd have to do a little bit more work yourself to fill in the gaps, but I just gave you all a solid strategy to use. It's one of my favorite strategies. All right. Anyway, happy trading out there to all the traders, to everybody who is interested in trading. Make sure you hit me up. It's a lifelong thing. Once you know it, you'll never put it down because you'll always be able to make you some money. And if you focus on executing properly, the money is a byproduct of your trading. You won't have to worry about how much you made, this, that, and the other. It only takes 3 to 6 months to change your life as a trader, once you know what you're doing and once you execute. All right, and that's just a matter of doing the right things, and I have the right steps laid out for you, and it's all mechanical. All right. So we should be having some free workshops coming up. But at the end of the day, yeah, don't miss these market gains. A lot of people getting into it all across what is this options, futures, crypto. It doesn't matter. As long as you can find a profitable edge, it can become mechanical so you can repeat it over and over and over with a checklist, and you manage your risk and psychology. It's inevitable that you're going to see significant returns out of these markets. All right. All right. So that's it. Peace, guys.